So I just got done listening to AppLovin's Q1 earnings call. All right. About 40% growth on revenue, right? About 38% net margins. But let's get into why I believe many people are sleeping on the company. I mean, we're talking like, so the company's revenue was right about $1.5 billion. Now, they sold off their apps business, but do maintain ownership stake in the company in which they sold it to. Okay, which is good. You know, they're going to focus on their advertising business more so than they're going to focus on, you know, the apps business and the advertising business, which I think is smart, right? You're going to go after the more explosive growth. They're going to go after, you know, the higher margin, more explosive growth business. That's a no-brainer, right? They're going to pour all their effort into it. One of the major things I catch is that they want to, and this is like one of the huge things I think for any business, is that they want to be, or provide rather, they want to provide the best advertising product on the market and provide the best advertising results, period, for their customers. And they don't want to, you know, send their products out, right? Or put their product into the market until they know that it's absolutely the bee's knees. You know what I mean? Two things that I noticed on the earnings call, and I really think people are sleeping on this company. It's not the 1.5 billion and the 40% growth or high 30% growth. It was like right about, it was like between 38 and 40% growth. Absolutely crazy good. You know what I'm saying? Absolutely crazy good. I think it comes down to more. I think it comes down to more like adjusted EBITDA per employee was like $4 million. $4 million. That's crazy. Crazy to me, at least, right? But even more so is they're developing a self-service dashboard for their Axon model. All right. Now, they've already penetrated heavily. Well, I wouldn't say they penetrated heavily, but they already have a really strong presence in the apps market. Okay, so there's that. But what I think is most important is that they have in the web services, or, you know, open web, they've penetrated less than 1% of the market. Okay. And this company's talking about having a line out the door of customers who want to jump on the platform to advertise through AppLovin and spend tons of money. Now, right now, they're just going through a pilot phase of the e-commerce business, right? The web service that they have, you know, the running e-commerce pilot, right? It's already at a $1 billion run rate per year, right? But think about when they can open a self-service dashboard, and they're going to get there, right? They're going to get to the self-service dashboard. When they get there, how much more growth, explosive growth, and that's what they're talking about, having explosive growth for that, you know, for that business, just the e-commerce ad business. Now, when we break all this down, right, we got to break all this down. It's absolutely massive and huge to think about. You know, the ability for this business to scale. It's the ability to scale e-commerce versus like the apps. You know what I mean? Not only are they going to continue to be and have been the best company for ROAS for their apps business, but when they start becoming the best company for, you know, e-commerce advertising, has somewhere around a little over $5 billion of revenue. And the net profits are insane. I mean, the last 2 quarters, high $500 million range. I think Q4 was 596, and then Q1 was like 570-something $1 million in net profit. That's massive. Everybody's jumping all over Palantir, right? At a 270, $300 billion market cap. You know, AppLovin's adjusted EBITDA for the last for the guidance for this next quarter. Adjusted EBITDA was like 9.8 billion, or 9.8, not 980 million dollars. That's more than Palantir's last quarter's revenue, and we're talking adjusted EBITDA, right? AppLovin trades at about $100 billion market cap. Better margins, stronger growth. I'm not saying anything bad about Palantir. Nope. Palantir could scale and become bigger than AppLovin could ever. Right? Sure. Maybe. Possibly. Right? But if we're valuing the two companies, AppLovin is about a third of Palantir's value. But we're talking $500 million more revenue. Now, this past quarter, they guided, I think they said 1.195 billion and 1.215 billion of revenue. And I would say that's only because they divested the apps business. If you added the apps business, we're looking at probably closer to $1.6 billion in revenue. Okay, alright. So we're talking, without it, 1.2 billion. I would say they're sandbagging it, they come in and beat. Always. Well, not always, but recently always, right? And I think they're so focused on driving customer success, not successful ad spend, but essentially they're trying to drive their customer success, meaning we want to be the reason or a staple or must have for these companies that advertise through our business to be successful. You know what I mean? And that's what they're working towards. They're driving success in business, and if the return on ad spend is better than everybody else's, which it has been, then advertisers, more and more companies, more and more advertisers are going to come onto the platform. Now, they have a limitation, right? There's two things that I'm worried about. They have a limitation on how many companies they can onboard because they have such small teams. Okay, they have a low amount of employees, and they were talking about downsizing, right? While also scaling. Okay, so that's going to limit the ability to scale without self-service dashboard, without self-service onboarding, right? If they can execute on that, how does that look? But it opens them up to the entire world for advertising. Now, they said they don't run in China, and I doubt that they'll ever run in China just because of the way China is, right? That's fine, whatever. Cool. No big deal. You got a whole world outside of China and that's a lot of advertising companies out there without China. No big deal, right? The other thing is AppLovin does depend, as Meta and other advertising companies, they do depend on the smartphone. They depend on, how much viewers are locked into the smartphone, right? And on a screen. Eyes are on a screen. They need eyes on a screen. What happens when Meta smart glasses, Google's working on smart glasses now, Apple's going to show up to the smart glasses market for sure, right? So you're going to have, what happens with smart glasses, right? That's my biggest question. Smart glasses push, smart glasses are going to push a different market. Now, does it help AppLovin or does it hurt AppLovin? That's yet to be found out. But for the company's ability to scale, it's huge. Like, I think he said since they started with the Axon model, they've quadrupled the amount of business they have, right? Huge. And that's like 2 years, the stock 50x, whatever, right? But they're still only trading at, I don't know, a 34 PE? Not even a 34 PE, because let's put it like this. They're going to do probably $500 million plus profit a quarter this year, right? So that's $2 billion net income. And if the company's valued at $100 billion, then they're in the high 20s for PE at a company growing 30+% top line while growing the bottom line much stronger, while also having a killer Rule of 40 score, and at the same time not only having a killer Rule of 40 score, better than almost every other company, and nobody talks about that, but okay, whatever, alright, whatever. But at the same time, you know, having net margins at around 40 freaking percent. And this company's trading at high 20s for PE. Are you kidding me? While we got other companies, like, a lot of people are totally missing it. I think this company can easily double, especially if they do the self-service dashboard and tons of more advertisers can come onto the platform. It could have oversaturation, but maybe not. I mean, think about all the companies that are doing advertising already. Meta, Google, Amazon. I mean, I would go down a whole list of big companies doing advertising, but I don't think that the full value of AppLovin is recognized, and I think there's arbitrage there. Let me know what you think, y'all. Anyways, go listen to that last earnings call. Matter of fact, go listen to the last 4 or 5 earnings calls and tell me you don't freaking see it then after you listen to that. The biggest thing for me is that this self-service dashboard where companies can just onboard all by themselves. Once that happens, boom shakalak, baby. Boom shakalak. Monster growth. And I think a lot of people are sleeping on that. And why wouldn't you? Could you really take AppLovin, the name AppLovin, serious, and then look at the chart and see how it moved, and you're just sitting there like, I don't know about that, you know? So, hey, just saying, I told you, triple up. Next, if you're looking at companies and you're looking at like obvious wins, easy double up next 2 years. Easy double up from here. Easy double up. After this self-service dashboard, it's gonna run. It's going to make it. Oh, it's gonna make it so much easier for them to just drive revenue growth. It's gonna be insane. Not only that, but drive revenue growth for customers. CEO mentioned there's a line out the door. I mean, let's put it one thing for certain. The last time I heard customer demand is a line out the door, and that we're changing our business model to onboard customers more quickly, that company was Palantir, and that was July 2023. And now I'm hearing it here. We're changing our business model. We got customers out the door. Our onboarding process is about to be way quicker. High margin business. We drive value for our customers. We're dedicated to driving value for our customers. We want to put out the best advertising product possible. Maybe that's not the same exact business model as Palantir, but